With the Foreign Account Tax Compliance Act, FATCA, the U.S. government aims at the disclosure of assets of taxable U.S. citizens at financial service providers worldwide. FATCA is part of the Higher Reporting Act. FATCA regulations complement the Qualified Intermediary (QI) directives from 2001. They represent the most profound change of the U.S. withholding tax in the years since 2001. FATCA affects most of the non-U.S. financial service providers. Effects also apply to operative core processes. With the Act, the IRS focuses on U.S. American tax evaders. All foreign financial institutions are requested to grant the IRS access to business relations with U.S. taxpayers. These are, for instance, U.S. citizens, green card holders, people who reside in the U.S. for business purposes, or U.S. unincorporated firms. Financial institutions must comply with the extended identification for their customer relations. U.S. persons are to be identified and recorded using check scenarios and legitimation data. If there is no evidence for U.S. tax liability, this has to be explained and reported using predefined forms. FATCA also includes an annual report to the IRS including customer, account data and balances. Customers who refuse to be checked are regarded as non-cooperative. As of January 2014, such persons are required to pay a penalty tax of 30% from all U.S. sources and a percentage thereof from other payments. The new term of non-U.S. financial providers subsumes many entities. It not only affects credit institutions such as banks and savings banks, but also other financial service providers, for example, insurance companies, building and loan associations, leasing companies, and asset management companies. FATCA is implemented in several steps. The Act will come into force in 2013, which and will have to be taken into account by financial institutions with regards to their strategic and operational planning. Let us look at the steps covered by TONBELLA Solutions in detail. New customers. Extended requirements for identification of U.S. persons at customer acceptance apply as of the 1st of January 2014. Existing customers. Identification and classification of the customer base must be concluded through the 30th of June 2014. At first, it only comprises asset accounts with a balance beyond $1 million. The remaining U.S. customers are to be identified at a later date. Reporting. For annual reports to the IRS and national authorities, a reporting obligation applies that will be extended until 2017 regarding the data supply. Compliance. Monitoring of customer relations also comes into force on the 1st of July 2014. When monitoring and updating existing customers, change of circumstances and validity of official documents must be considered.